Hey traders, checking in on the stock market today. Bulls playing some defense, but not doing anything in terms of going on offense. We have some Facebook earnings reactions to be looking at after hours. Let's see how we're shaping up. All right, so we opened this morning with an overnight bounce taking place. And once we checked in last night, we had the Microsoft bearish earnings reactions, and that significantly shifted after the conference call. So just looking at Microsoft after hours yesterday, we did the video and we were still fairly weak, and that changed. So that shifted to seeing the broader market bounce overnight. So we headed into this morning scouting a 4-hour lower high, and it was set pre-market. It was set pre-market when this inside bar broke bear, and then we were watching for a higher low compared to the overnight low. So a little bit of a different perspective this morning in how these sectors were interacting with each other. It was a bit more choppy. And recently, 2 days ago, when the bears have had their complete control, everything dropped in unison on Tuesday. So that was nice and clear. But today, when we opened, we had the low of yesterday being tested on IWM, XLV, XLF, QQQ, all first thing. And IWM, XLV, XLF all held their low and started a bounce, and they were leading the way to the upside, and QQQ was still a little bit weaker. And then QQQ bulls took over and they controlled the morning. And as they did that, those three sectors dropped down and broke their low of yesterday. Granted, they didn't see a whole lot of follow through, but it was just a shift with IWM, XLV, XLF on one side and then QQQ on the other side. And they were doing a bit more fluctuation than we've seen recently. So started the morning just trying to grasp, okay, who's on team bull, who's on team bear? And they kept flipping on who was team bull and who was team bear. But one thing that was clear was QQQ being the leader of team bull, but the 2-minute stair step climb. So the importance of trend changes. You hear me talk about it all the time, higher lows, lower highs. Why am I constantly focusing on that? Because the trend changes are important to give us support and resistance levels to be able to establish trade game plans off of. But in addition to that, they are part of follow through and trust, essentially. So on a move like this, when we're coming from an extremely bearish environment and we're seeing a big old bull move, an aggressive bear is going to say, all right, well, when we lose the stair step pattern, and again, there's a YouTube video. If you Google TheChartGuys YouTube, or no, Google TheChartGuys stair step, then this video will come up. But the trade signal for the bears, the aggressive bears, was short when 321.80 broke because that lost the pattern of a higher low every single candle. Stop goes over the high of the day. On this pullback, we know a 2-minute higher low is the most likely scenario. Why? Because anything above the low of the day is a 2-minute higher low. We then hold EMA 12 support. My style of trading would have me exiting partial on the initial pullback at EMA 12 to protect. Because if I'm wrong, we hold EMA 12 and we see a new high of the day, we confirm the trend change, and I stop out. So I don't want to take a loss on the first trade. So if I can sell partial and be risk-free, that's my style of doing so. If a trader missed the initial pullback, or I should say the initial pullback on the stair step, they then say, okay, well, if it's a big enough drop here, I'm going to top fish the high of the day, anticipating a lower high is the most likely result of the next bounce. So on this pullback, there was a second chance where patient bears said, all right, I'll make an entry short. I'll put my stop over the high of the day. If we confirm the 2-minute downtrend, bulls lose their momentum. So what does this remind us of? Straight all bull move, never change the trend. Higher low, fail resistance, bears completely take back over. Look at the daily time frame for QQQ. It happened back here, that 3-week bounce. All bulls, higher low every time, pull back to EMA 12, form the higher low, fail resistance, confirm the downtrend, bears take over from there. It's the exact same thing. One's on the daily and one's on the 2-minute time frame. Why does that happen? The way that I envision what is going on is that we have just a runaway train, essentially, just this perpetual momentum of just short term, just buying and shorts covering. And eventually we reach a point where that momentum is lost. at least temporarily. And if we are going to believe the bulls, and if they are going to confirm a trend change, the momentum is lost, you form a higher low, and you see continuation. When that happens, the momentum is lost, bulls are taking profit, bears are entering positions. So you drop. Okay, you drop. Then once you set the higher low, shorts are covering some positions, bulls are buying the dip. If you cannot break to the higher high, that shows you that the bulls have lost their momentum. I'm just viewing it as a tug of war, team bull versus team bear. And the bell rings, and right out of the gate, team bull is just absolutely owning team bear. They are just pulling back, but they use up literally all of their energy. And as soon as team bear gets the slightest ground back, team bull can't do anything to stop that. So what a healthy bull move would look like would be team bull takes a breather, we consolidate and set a higher low, and then team bull says, all right, back at it. We've got more energy again, higher high. Anybody that went short on the morning on that pullback is now stopped out. It shows us bulls are buying the dip with continued buying pressure. If you do not change the trend, you cannot trust the move. So that was a really nice bear entry. 2 different bear entries for bears. And we know in this market environment, we are scouting bear entries until the bulls tell us and give us a reason that we should be looking for bull entries. We're not in historical extreme RSI levels, so I'm not looking for bounce bull entries. We are not seeing any kind of proof out of the bulls for trend changes on neither the hourly nor the daily. So there's nothing. The bulls played defense today. They did nothing to go on offense. So SPY, we look at yesterday's levels. SPY had an hourly resistance, 422.31. First thing on the morning, we reject from 422.02. We reject from resistance by 29 cents. We drop down and hit the low of the day. Granted, we did see a significant bounce, but 0 follow through. So a V-shaped bounce back to the high of the day. And at that point in time, guess who did not hit a high of the day? QQQ did not. We know that SPY is not going anywhere significantly to the upside if QQQ is not joining the party and most likely has to be leading the way. So again, if I look at SPY and say, oh man, what a fake out. We break resistance and then that's the top. The clue is right here in QQQ because we failed resistance by 60 cents. And that marked the high of the bounce. Here after hours, Facebook is having a bullish earnings reaction. And again, this isn't surprising. I'm not going to gamble on earnings, but if I were forced to gamble, I would have made a bull bet. Why would I have done that? Because we dropped 17% in 6 days as soon as Netflix earnings came out. That for me is pricing in a significant amount of bearish anticipation of earnings. So that would be the only reason why I would have made a bull bet. But again, that's a notable drop. And so here we are right back at where we were when Netflix reported earnings. We essentially priced in a bearish earnings reaction. Earnings come out and say, nope, not that bad. And here we are right back where we started. Anything under 218.43 is just a daily lower high. But clearly, this is a bullish reaction to earnings. So with that, we're seeing a bullish reaction after hours from the market. Tomorrow matters more to me than Facebook earnings because Amazon and Apple are more important to QQQ. Amazon and Apple are probably something like 20% of QQQ's entire holdings, maybe something like 15 to 20%, because I know Apple, Amazon, and Microsoft are 30%. Microsoft's out of the way, but it's very notable for the NASDAQ. We know that much. So here after hours, you got a bull move, and so we are heading into the overnight session here with an hourly equilibrium on the NASDAQ futures. Higher low set thanks to the Facebook earnings reaction, but still hourly lower highs. A lot of daily inside bars we could see early on after the bulls kept control. We knew that probability for daily inside bars would increase. Keep in mind, when an inside bar is forming, zoomed in, you got a tightening range, but very often the zoomed in time frame, the shorter term trends lose clarity. So we reached a point on the 5-minute time frame on both SPY and QQQ today, And again, I was looking for it. I know if it's an inside bar, we're probably going to lose clarity on the 5-minute time frame at some point today. And for me, that happened, and I just stayed zoom out on the 15-minute time frame. But just make note that if you have an inside bar forming, if you are to zoom in, oftentimes the shorter term time frames within an inside bar can get choppy. And that is where we eventually got today. So tightening hourly ranges. If the tightening hourly ranges break bull, a daily bounce is underway, and we scout a daily lower high. If the tightening range breaks bear, the bears keep their complete control. And that's that. I might be on the 12-hour time frame. I'm finding 12-hour clarity in the crypto space. I may go there with our stocks futures as well. I probably will. If these hourly equilibriums, tightening ranges break bull, I'm going to be watching the 12-hour lower highs and 12-hour downtrend as a guide. SMH, clear lead bear continues, lower high and lower low today, big upper wick. Again, bullish reaction. You can see the correlation to tech, where SMH is going to do what the NASDAQ does. So we would need a break at 233 here for us to say an hourly trend change to the bulls has occurred and a daily bounce is underway. And then we would scout a daily lower high, anything under 253.27. So again, many names with tons of space where once we do see a little bit of offense, again, today was just some defense from the bulls. Once we see some offense, tons of space for daily lower highs on a lot of names. Tesla, daily inside bar, but closing very weak. If we drop down and break 875, we're looking at the low of after hours yesterday of 861.50 as the next level. So clear inside bar. If it breaks bull, we scout the daily lower high. If it breaks bear, we test our lows. Healthcare, lower high and lower low today. Hourly downtrend continues. Have to hold the low of today and break the high of today if we're going to confirm an hourly trend change. If we do that, we zoom out and scout a daily lower high. So again, it's only aggressive bears that are making entries on a day-to-day basis at this point. Patient bears are waiting for that daily lower high. But as the NASDAQ showed us this morning, there's definitely still opportunity for bears intraday. Financial sector, same deal with a lower high and lower low. Upper wick and double top at 35.65. Must break that level to confirm the hourly trend change, start a daily bounce, and scout a daily lower high. IWM, same deal. Lower high and lower low today versus yesterday. Hourly downtrend still very clear. Have to break the high of today to confirm the hourly trend change, get the daily bounce underway, scout the lower high. You get the idea. We're doing the same thing on all these sectors, and we're looking for the same thing. If you don't prove an hourly trend change, the bears are extremely comfortable and have no reason to cover. If you confirm an hourly trend change, daily bounce underway, scout the daily lower high. EMA 12 as a visual guide. Biotech sector, lead bear, lower high, lower low. Same deal, hourly downtrend is our guide, still intact. Tons of space for the lower high on the daily. US 10-year still keeping an eye out for possible head and shoulders. So talked about where if we held 2648, that's a potential right shoulder forming. If we failed 298 and drop down and break these necklines, break your neck, 2717. Throwback to Busta Rhymes. I was listening to that song in middle school. So we've got a potential head and shoulders. Have to fail 298 and break those daily higher lows. Then we would zoom out and scout a weekly higher low. We're still scouting a weekly higher low. This is just essentially going to tell us, is this a weekly bull flag or not? If we confirm the head and shoulders, probability for a weekly bull flag will drop a good bit, but burden certainly still on bears at this point. TLT still very weak. Daily EMA 12 resistance rejection. 2-day time frame, still a potential bear flag. So again, personally being a bit more patient. No interest in this bounce yet. Bulls are not proving anything to me, but I'm just keeping an eye out in case they start to prove something to me. Chinese names stood out with a bullish correlation. Well, they stood out to me to be watching for a bullish correlation. I was checking in on BABA, and this morning before the bell rang, I checked out BABA divided by QQQ and saw, BABA has a bullish correlation comparative to QQQ 3 days in a row, where once the bell rings, BABA is either holding on, it's either dropping less than QQQ on a red day, or it's going up more than QQQ on a green day. That caught my attention because BABA still has a lot of space for a weekly higher low to form, and we know after this amount of volatility, generally speaking, an equilibrium is the more likely scenario. So that piqued my interest, but unfortunately Baidu has earnings tomorrow, so that made me uninterested. It said, okay, I'm going to keep an eye on it, but because Baidu has earnings tomorrow, I am going to remain patient. But in the end, tons of volatility today because BABA started the day strong and it shot up 5%. Essentially, the way that I view that is I can look at that and say, okay, we got a bullish correlation the last few days. Does that mean BABA and Chinese names are going to go up today? No. But it tells me if SPY and QQQ go up today, BABA is positioned well to go up more significantly, which is what we saw in the morning. Big time bull move, gave it all back, big red flag. But look at that volatility. We went up 5% plus, we pulled back over 5%, and then into the end of the day, we bounced another 4.5%. That's a ton of volatility in both directions, which as a day trader tells me there's a lot of opportunity in both directions there. So a very nice recovery. We will be just watching for, let's see, we got resistance at 90.68. We need a big enough bounce to create space for a trend change attempt if we're going to set a weekly higher low. And then we would scout a weekly lower high and a tightening range through May. But the burden is still on the bulls to prove to us that a weekly higher low is shaping up. But just an example of using that bullish correlation to recognize. It's the same thing, you know, these names that are showing us relative weakness, as long as they keep showing relative weakness, we can say on a red day, these are the names to be looking bearish on. On to commodities, the dollar is breaking a very key resistance level. We don't have enough follow through yet for it to be a convincing break, but just the fact that we made it up to 103, which is the highest level in over 4 years, that's very notable. If we break 103.82, it's the highest level in multiple decades. We know that a bullish dollar is not ideal. It is bearish for stock market, crypto, and commodity bulls. This is a runaway move right now. This is the strongest dollar move here that we've seen. We saw a stronger here. So this is the strongest move we've seen in 8 years out of the dollar. The weekly RSI is approaching 80. It's definitely extended in the short term, but look how much space we've got for a daily higher low to form next time we consolidate. We can drop multiple percent and still be in a daily uptrend. So definitely paying attention to that and having less confidence in the metals bulls, in the stock market bulls, as long as that is the case. And with that, we are seeing the metals continuing to struggle to bounce. Gold is continuously rejecting from 4-hour EMA resistance. Silver, the same, and just slowly fading down. RSI levels cooling off. We're not oversold on the daily. We're close, but lower high everyday pattern and just a race to the exits in the metal space. And the miners are still feeling it. Down with a close at the low of the day 2 days in a row. Lower high every single day, 7 days in a row. Close to daily oversold, but not there yet. So at this point, it's looking like metals bulls, if we're going to get any kind of bounce going, they need to see the dollar top. Uranium CCJ trying to build a base of support. Down at 25.92, 26.01. But if we're going to see any kind of bounce follow through, we must see. Again, it's just another example of playing defense. Bulls played defense today and held some supports. But we are not going on offense. Have to get over 27.52 to prove anything in the short term. So that's the theme of the day. Bulls played defense. A lot of daily inside bars out there. We stopped the bleeding for now, but not doing anything on offense yet at this point. And at this point, we're just watching to Amazon and Apple earnings. Is that going to help? A couple things I'm watching on these futures charts. I'm watching this S&P 500 support line, which is now a quadruple low. And again, it's a see it from space level that everybody is looking at now. This is the support level. Bulls are hoping to have enough space off of this where they can change the 12-hour trend back to the bulls, but we need a green day tomorrow to try and create that space. And also making note that the last time we saw that significant bounce in the NASDAQ, it was coming from, or I should say the market-wide significant bounce, it was coming from a bear break in the NASDAQ, which was leading the way to the downside, but the S&P 500 did not break bear. It held support. So right now, the NASDAQ just had another bear break leading the way to the downside, and the S&P 500 is holding support again. So if the bulls are going to rally, this is the spot to do it from, but it's going to be Amazon and Apple earnings dependent tomorrow after hours. And then even if it's a bull reaction to that, and we zoom out and say, okay, daily bounce is underway, it's then going to be FOMC dependent. So that's why I am not swinging much of anything in this current market environment until we make our way through the fundamentals gauntlet of this 2-week time period. Bears still comfortable, burden on bulls. Do good things. Thanks for watching.
We got the whole crew here. We got some ducks, turkeys, geese, baby duck up there. We gotta go peep. Got this flower bed all planted. Progress on the peas and potatoes. Greens, radishes, giant flowering rhubarb.